What's up, viewers, and welcome finally back to the show. Read Rothbard and buy Bitcoin and definitely use Bitcoin. I'm very honored to be joined today by Matthew from Crypto Voices. What's up?
Hey, how's it going, Max? Pleasure to be here. Thanks a lot for having me.
Well, thank you very much for joining me today. And I really have to say that the Crypto Voices, both of course Twitter, but especially your podcast section, is very good. It really is a plethora of resources. You cover both readings of good articles, but then you also talk about interesting things happening in Bitcoin, and it's definitely something that you and Fernando have put a vast amount of effort into, and really looking forward to all the new episodes coming out and downloading and listening to them as fast as possible. So definitely thank you very much for providing that information.
Well, yeah, appreciate those words for sure. I mean, we're trying to cover what's interesting to us and cover things that we think are important regarding the monetary system and Bitcoin and economics and free markets and so on and so forth. And I think we're all pretty like-minded here. So it's always good to talk about topics that we know and love. And I think it's what we try to do. Hopefully we're going to get some other guests in the future as well that will be maybe even a bit more adversarial and not such Bitcoin believers. We always
These cultists.
exactly. No, but I mean, I think there are some people that just continually view Bitcoin as like the next .com boom bust or just some bubbly stock, and they just don't view it as an opportunity for monetary sovereignty around the world for everyone in both developed and developing nations. So there's so many things to talk about as you guys are doing and as we try to do as well. And Fernando sends his greetings as well. He wishes he could be here to chat, but he's got to spend some time with the fam this weekend. So,
Which is always good, right? Just spending time with family and friends, always important. Yeah.
Of course.
So yeah, you touched already on so many interesting things, and the aspect that Bitcoin really is this way of first and foremost providing financial sovereignty and to the individual and full control of the monetary supply and monetary policy in general back to the individual. That is something that is truly novel, because even with gold, we did not have that.
Yeah.
Like you could not easily spin up your own gold 2.0 and change some of the monetary attributes, but you can now with Bitcoin. And that, of course, leads to a vast amount of competition and different entrepreneurs providing the service of money. So where do you see this competitive aspect, right? That we have now 1,001 cryptocurrencies all around, and that everyone can start his own currency.
Yeah.
What exactly does that mean from economic sense?
Yeah, well, a couple things, I guess, from how I look at it that are encouraging for Bitcoin. Start with gold, maybe. You mentioned gold. I think it's very encouraging that there are so many that are interested in the Bitcoin space that don't consider themselves gold bugs, don't consider themselves free marketeers or voluntarists or Austrians or anarcho-capitalists or libertarians or classical liberals. Some of them are looking at it from even social democrat perspectives, and there is not this sort of unified position of even sound money in Bitcoin. Certainly, it's a huge part of it. I think it was born in that ideal, but I think it's very exciting that you have technologists and developers and people from all walks of life that just couldn't care less about the yellow metal. So I think that is very exciting, and I'm really excited about that point. Um, Another thing regarding money and how it's used, how it develops. There have been noble efforts from many in the traditional analog space to try to make it better. One that always comes to mind with me is Gold Money. Jim Turk's Gold Money, which is a great service. I think it's fantastic. Um, if you are a gold bug, if you just want to hedge, if you want some peace of mind about your yellow metal or gray metal being stored safely and comfortably and at your fingertips, from the reach of your computer. it's possible to do those things in the digital age better than it ever has been before with any goldsmith, any money warehouse. But it's very interesting too, because that market has shown to not grow um, as fast as Bitcoin. Bitcoin topped out over 300 billion, right? And that was certainly a boom time. But a year ago, which is going to be painful in the next couple of days to see the full year-on-year return of the price, but that's a whole other topic. But the as far as I know, like Gold Money's holdings, and again, I have nothing but good things to say about that service. They've been fairly stable at around $2 billion worth of gold for many years, probably 10 plus years, I believe. And that's very interesting because uh, you start to see maybe some of the inherent demand for gold as a hedge, as an inflation hedge, as a money. And indeed, from the beginning of something like Gold Money, like they had pure sound money, Austrian economics, freedom in mind. This was before Bitcoin. It's probably 15 years ago when he started it, I believe. Um, and there are some Bitcoin merging and acquisitions that have happened since then in Gold Money, which is interesting. But besides that, before Bitcoin, when it was just storing, hedging gold, they had they had it in mind to try to start a payment system with gold as well. They were calling it digital. They were calling it digital gold. Um, Very interesting comparisons, because that's what we call Bitcoin all the time, is bit of digital gold, and or at least some people do. But the idea from gold as the anchor, as noble as it was, and as trying to, as Hayek said, get around the current system in a sly roundabout way, they were doing everything they could to make gold more adopted as a payment system. And Peter Schiff is still on this hill, on this high horse. He's never going to get off it for sure. But he there, and and many others. I think Jim Turk is very open to Bitcoin, and obviously they've sold essentially their main stake to BitGold. I guess not Nick Szabo's BitGold. Don't get confused with that. But they are working with crypto projects now more. And they're also doing other things, like they're lending and borrowing with gold and silver based accounts as well. So there are very interesting developments there. But I guess I just go on all of that just to show that still from a market demand perspective, it's interesting to me that such a noble company, a noble cause, I mean, they would physically allocate where your gold is audited twice a quarter by two different companies. I'm pretty sure it still is the same. You would have it like your gold in the vault would be physically allocated in a different spot, like in a different, enclosed, caged area, I think at times. These were very well thought practices to keep your wealth safe and secure, and still able to be transacted with other peers in the Gold Money network, and they offer credit card services, debit card services as well. But it turns out that those things cost money. There are fees surrounded with such a type of payment system, and you got to be ready to pay for it. I like the service. I use the service, but I have no problem with gold. But it has shown that Fernando has the Portuguese title of his channel is Money for the Digital Age, and it just seems only natural that we have finally found a all the good things, secure, immutable, scarce asset that's natively digital. It's incredible, and I think we will see that as we've already seen, umpteen times more market adoption in Bitcoin than there's been in some company like Gold Money, which again I really respect what they do, but you see the differences I think it's a generational thing too. I think obviously the technology compounds upon itself much faster than a company like Gold Money can do with old school agreements to protect gold and to make gold more transactable, more auditable. This stuff is more expensive than you would ever think. Uh, might be, well, it's more expensive than anything compared with Bitcoin, obviously. So I guess that's a bit of a tangent maybe from, well, I don't think it's a tangent, but to stay with gold first, I always like to try to make those comparisons. Gold is a great hedge against the problems in our monetary system today, but it's amazing now that we have a digital hedge. And we can talk about how much courage one should have with Bitcoin, maybe from an investment side or not. Certainly, a lot of people lost courage this year with the price drop, but I, for one, don't look at it that way. I mean, I've been trying to accumulate every every little bit of Bitcoin that I accumulated gives me more courage for the digital age, and I think that will be reflected in time in the markets as well. So, just some thoughts there.
Yes, fantastic. And gold is a damn good currency, right? It's a beautiful money that has been around for thousands of years. So saying that Bitcoin is in all aspects better is, kind of presumptuous. Yes, Bitcoin is also really, really good, but I mean, just the Lindy effect alone, gold has been around forever, and it will probably be around forever. Right? There's no sign that gold can corrode or disappear into nothingness all of a sudden.
Yep.
And it just has been used as a money for a long, long time. And one important aspect or reason why this is the case is that the stock to flow ratio is rather high and stable. This means that throughout, especially recent history, the new gold being produced, being pulled out of the ground and refined, was between 1 to 2%, but never much more. And this means that you, as an entrepreneur, can easily calculate how your percentage of the total gold supply will change, not just today or tomorrow, but in 10 years and 100 years from now. And so this aspect of having a hard money supply that is unchanging in its issuance schedule, rather unchanging, and predictable, therefore, is from a calculation economic sense, really, really important. However, then, of course, with Bitcoin, it goes even further than that. Because not only do we know for every Satoshi when it was created and how many there are in total as we are speaking right now, we can verify this, not just for today, but for the future. And not just guesstimate how much it might be, but actually we make the rules of how many Satoshis there will be in existence. And because we make the rules, well, if we don't break them, then we uphold them. And this gives even more, certainty in a calculation point of view that you as an entrepreneur know for a fact and can verify this irrefutably and authoritatively without trusting anyone, that you have 1% of the total Bitcoin supply, which would be quite nice to have.
No doubt. And I think you can take that even further. And, I'm in the process of updating some of the language on our site as well. Because when I started in about mid 2016, some of the long scale sort of charts and looking at some of the inflation and sort of what it could mean compared to other global money supplies. But the interesting thing, and from George Selgin, who was our first guest on the show, to many others, you can actually go even further with Bitcoin, and you can say that Bitcoin is non-inflationary, even though it seems that it is inflating every 10 minutes at 12 and a half new coins. That is more like an issuance of some sort of an agreement. It could be a stock agreement, it could be some option agreement, but the point is that it's predictable that new coins come into existence, and that's very, very different from obviously fiat based money, base state based money, and even gold. Even gold, because with gold, even though it's relatively predictable, relatively stable, somewhere around 1.8% a year, new gold supply is mined. With Bitcoin, we know that there's 21 million, and we know that that's the number. And a lot of people have tried to play around with this idea. They talk about forks. They talk about, the mainstream press talks about the instability and so on and so forth. But the bottom line is no one alive today has ever seen a monetary media come into existence. And so we don't know for sure how volatile it was at the time when it did. And it probably took a lot longer to come into existence as a quote stable means of transacting value, then I think Bitcoin will, and I think many think that Bitcoin will, precisely because we're in the digital age. Information is near ubiquitous. We can easily verify these things, and more importantly, we can contribute and be a part of these things and verify and validate ourselves. Um, while we're transacting, it's an incredible form of media, and anybody in the mainstream media that basically just talks about price and volatility, they're just Philistines. I mean, they don't they until they start to read a bit more, I just can't take them. I can't take them seriously. But it's not inflationary. It's non-inflationary, which is unique. We can maybe talk about what some of that means for economics and the money supply in the future. I think there's some guesswork that will be going on there, but it's very interesting because even though the rate of issuance of bitcoins will be lower than gold sometime in the mid 2020s, after I think two halvenings from now, there will that's still a known quantity almost to the day of when that's going to be mined, or when that's going to be mined and come into existence. So I don't I don't call it. I used to say it, but I don't call it anymore. Inflationary or deflationary or disinflationary, which, if anything, it's somewhat resembles a disinflationary schedule. Increase in the rate of inflation decreases, but or the rate of inflation decreases, but that's a known quantity. So it's essentially it's a non-inflationary money supply, which we've never seen, and it will be very interesting to see. Many talked about that. Seyfedin talks about that. Everybody talks about that with the difficulty adjustment. It's a very powerful thing, and it's very exciting to see. I think how that will play out in the future.
Yes, very much. And I would agree that there is no inflation in Bitcoin. Well, first and foremost, because there is a consensus rule on what the exact issuance rate is. And because there is a consensus rule, per definition, when you download the Bitcoin Core client and when you make your own rules and verify them, you voluntarily agree to these set of rules. Right? Yeah. So there is no coercion to use the increasing money supply as a money. And therefore, there is at least not a moral argument that the inflation in Bitcoin is theft, because you voluntarily choose to use it, right? And therefore, then I would not necessarily further go that there is inflation, because Rothbard defined inflation, especially with with gold in mind, that the issuance of new gold, the production of new gold, was not inflation in his mind, but rather for example, fractional reserve increase. Right? If you have additional paper certificates that represent more gold than are actually in existence, this increase of the total certificate amount, if that is higher than the total real gold amount, in a sense, then that would be inflation.
Yeah, I think I would probably part ways with Rothbard on that definition, because I would define it more on the predictability. He would stop with predictability as being good enough with gold, so that's non-inflationary, and then fiduciary media, bank created credit on top, bank created paper on top of gold would be inflationary. I mean, I agree with that as well, and I agree with a lot that Rothbard writes about banking and a lot of other topics. But I do part ways with him on the soundness of a fractional reserve banking system versus a non-fractional reserve banking system. I certainly agree that central banks are the culprit. Central banks are the ones that are the biggest players that cause the most problems. But I don't necessarily think that bank-created money is a problem or fraudulent or even disrupting of the business cycle in the context of a free market. If you had a free market, I think that those things could work themselves out. We can get into that if you want to, but I'm more, and Fernando is as well. Fernando used to be, I think, more he studied under, Jesus Huerta de Soto, famous Austrian 100% reserve banker or economist in Spain, and he's sort of come over to the free banking side as well. It's mostly an academic argument, I think, at this point between Austrians, because it's the big issue is like central banking, right? And then the narrow issue is, if we had a free banking society, what would it look like? And so I think that's the most important thing to point out in this debate is we all agree that the big culprit is the monopolist central bank intervention in the economy. And if you had no such thing, I think things would play out differently. And we actually interviewed Bob Murphy on this as well. So he is a 100% reservist as well. He has. I asked him a couple times just to make sure I got it, because I was always curious, because I had, Rothbard was also writing in the context of a non-digital world. He passed away before the internet was born, well, before the World Wide Web was born, basically in 1995, like right the same year. And I think he might have changed his tune on some of those things, as far as, the way that these monopolies can be broken down. But it seems that he would, in some of his writings, like argue for some legislative or some legal precedents regarding 100% reserve banking, where I was asking Bob Murphy about this, and I said, like, what would be the solution? How would you get, your ideal system to come about? And he's like, well, I definitely wouldn't, want the SEC or other government agencies to put more regulation in to make that happen, which I totally agree with. It's just, and then he said, his words, I'm paraphrasing, someone like George Selgin, who I'm a big fan of in a free banking way, he thinks that reserves would be quite a bit lower in a free banking society, and I think that they would be quite a bit higher. And he interestingly said, I'm not sure they would be 100%. This is Bob Murphy's words, but he said, I think they would be quite a bit higher. And so at the end of the day, I think it's an academic, narrow side of the debate, but we all agree that the main culprit is the central bank, and that does trigger people. I mean, I think people in the anarcho-capitalist Austrian sense, it triggers in the sense that there seems like there could be some fraud going on there. There seems like there can be some misrepresentation. But the facts actually suggest otherwise. If you look at some banking history, which I believe George Selgin, Lawrence White, Kevin Dowd, a lot of these free banker economists, they've done tremendous work over their lives of showing that when you had a bank operating independently with either extreme low levels of regulation from the state, or no central bank at all, which is typically the entity that regulates the banking system, you had media of exchange, which is it's called fiduciary media. It's basically bank created credit. Any notes that a bank creates independently of any central entity, you would see these notes circulate well outside any sort of a monetary backing, and that's something I think should be acknowledged. Like there was never a case where a 100% reserve bank flourished, and actually, curiously, the only times it was tried was by state entities. It was tried in Holland. It was tried in Renaissance Italy, very, very lightly. But they tried to the city state, or the state is in Amsterdam. Actually, the Bank of Amsterdam was a famous one. They tried to do 100% reserves by decree, and they very quickly started fractionalizing because the rest of the banking system was doing it, and they actually failed, and they couldn't manage their own system better than the free bank competitors. But in Scotland, he's written about this. In Canada, there's been many. There's been some times in South America. There's been some times even in China, outside of the purview of the empire. There have been entities, banks that act as they move IOUs around, and people actually demand the fiduciary media as a more a more convenient way to transact than taking the gold around or even demanding that their gold is in some 100% warehouse. And that's a curious thing. That's an interesting thing. So even in Scotland, we're talking like 1700s to 1800s, there would be times where the the gold in the vaults was only 1 to 2% of the banknotes that circulated, and this would mean liquid money, money on demand, fiduciary immediate, demand deposits. These are things that everybody knows. They can, and these are all under convertible systems. I mean, we've always had a convertible system before 1971 in some way, shape, or form. So any bank, any bank or individual could go take a note from any other bank at any time and demand to redeem that note for specie, for gold or silver. And what you find if you look at history is that you don't actually see like constant bank runs or constant issues of fractional reserving, and you don't see money warehouses or goldsmiths running away with the gold. So there's a lot there in history, I think, to uncover. I think that it comes to an academic sort of thing, but what we have seen, if you do read some of the history, is that the people actually prefer. I said this on Marty Bent's podcast a couple weeks ago when it was recorded. My view is that like the gold standard or even a gold-based convertible system, which the classical gold standard was only late 1800s to World War I, but gold always had this sort of barbell problem. So there's a sweet spot in the middle where people like to transact with it, gold or silver, but there was always this small change issue on the one side or this big transport problem on the other. And, usually that was supplemented, that problem was supplemented with paper, with banks clearing these balances among themselves with paper, and then the people getting by just fine without the actual specie, without the gold or silver. And even when it came to small change, as Seljan has pointed out, in like Birmingham, UK, and the Industrial Revolution, you had private companies creating token coins. Token coins meaning the coins did not have face value to them. So the value, the metal content in their coin was an alloy. It was usually a bronze alloy. It was copper or nickel. Not at all representing the number that would be stamped on there of shillings or pence. And they would just circulate as money. Workers would be paid. This small change problem was what the Royal Mint could not keep up with it. And private button makers, oddly enough, who were good at making nice looking small things like a button, they struck coins that were token coins during the Industrial Revolution in the UK. And it was not just Birmingham, it went out to other towns as well after some time. But those were demanded as money more than some gold or silver coins. So there's a lot of interesting examples where the free market, the private market, private banking, or even non-banks can offer media that works freely. And the only time that you really have problems is once you see, okay, the state sees it's getting a little bit behind. They see that they're not getting as much seigniorage for their deficits, and they see that they probably need to monopolize this thing. And that's what they do. That's typically what they do. They monopolize it. They take it over. They license it only for, okay, there's a couple entities that we'd like. They can compete in the market, but you have to be chartered. You have to be licensed. And then, we're going to be the only ones that at the end of the day can print the monetary base or base money, or strike coins made out of those things, like silver and gold and copper. And there have been many other systems as well. Like, it's not just gold. I mean, I think Safety makes a good point, and it's true that gold has shown to be the supreme money of the metals. But silver was for sure the first. Over time, there were copper metals. Like at that time in Britain, there was actually a tri-metal system, so it was gold, silver, and copper, bronze, nickel, sort of some alloy. But many different times and places used not just gold, not just silver, but maybe other token monies, and they use paper. And again, the key, which is really, really interesting to me, and I'm not saying that I'm a full expert, but I've read a lot of these stories, is that those systems were flourishing in an environment where there was no central bank. Antebellum U.S. was another example. Pre-Civil War U.S. in Boston, there was a bank. Rothbard wrote about this. There was a bank. It's called the Suffolk Bank. They acted like a clearinghouse for regional country banks, banks that had many different notes, many different places. They didn't feel like every day or every week, like trying to go to each other and settle their balances. They would end up basically just settling at the Suffolk Bank. And this was just another private bank in Boston. Didn't have any state charter. Well, it probably had a charter. There was probably some charters there, but it wasn't a monopoly. Another bank could have come out and competed with the Suffolk Bank. But that worked pretty much all, early 1800s to the Civil War, and it worked successfully. So there's a lot of very interesting examples of free banking in society, which I think are important. But I guess your listeners may be wondering, or viewers here may be wondering, where Bitcoin could fit into this. I think Bitcoin solves all these problems, and it even solves the problems of if there is an issue with fiduciary media or fractional reserves. Because with Bitcoin, it goes 8 decimals out. Even on Lightning Network, you can transact in sub-Satoshis, which is incredible. That will be very interesting to see if something happens there. But the base money, or the monetary base of Bitcoin, is on-chain UTXO. And then you have something like the Lightning Network, which is, in my opinion, very reminiscent of a layered solution, like all these banks have done. I'm not saying that it's a token, but it is some abstraction from the on-chain UTXO. I'm not trying to trigger anybody. It's definitely different. I like to point out these little subtleties just to make sure clear what we're talking about. Like, I wouldn't call Lightning the silver bullet, so to speak, pun intended. I would say that it is the best way ever that we've seen to transact small balances while still maintaining the integrity of the on-chain or of the base money, the monetary base. Because, as we know, and I think sidechains will prove to work similarly, but with Lightning, with these layered solutions, you have the UTXO locked on-chain in a multi-sig, bi-directional channel, obfuscated, onion-routed environment, which is so many ways that you can get in and out of that easily. But there's no creation of new money, so that should make the 100% reservists, very happy. And it's possible that since we can do this off-chain, a Lightning channel balance is different. So here's what I was getting at. We should definitely recognize that a Lightning channel balance is different than an on-chain UTXO. Not saying that I'm not saying that it's fiduciary media. I'm not saying it's inflationary, but it is different, and there are trade-offs. So there are trade-offs we definitely need to recognize and acknowledge. And it seems to be like one of the best trade-offs ever offered in money, because you can, if you want to spend a smaller amount, the small change problem, right? You can get out from the perhaps higher fee environment, lock your coins, use someone else's channel if you want, and transact at almost no cost, and then get back on to the quote monetary base gold coin in your pocket thing anytime you want, on-chain UTXO, with all the benefits again of and there's just so many things. It's so hard to keep up for a non-technologist like me, but I think it's amazing what's being developed. And again, going back to the old gold money example, like, these are just things that I don't think gold money can compete with. I mean, so many developers are so excited about this. This is technology compounding every day around the world, truly global, such low cost. It's just an amazing, amazing thing. I find great promise. So, sort of to wrap up the free banking discussion I started to get into, I think we'd be very surprised what the market can find when you don't, and the market can produce when you don't have a government central authority involved. I think we're going to see this experimentation on Bitcoin, And I think the ethos of Bitcoin is such that they really do want monetary sovereignty, protection, non-fractional reserving of their monetary base. And it's very possible. So we may be able to, we can talk about the base money exhibit that we do on our site, which I sort of think is a novel description of comparing the Bitcoin supply to other supplies of money in the world today. But it's very possible that Bitcoin as a monetary base asset. So Bitcoin it doesn't have any claims. It's, if you hold Bitcoin, you have an asset. No one else has a liability, just like gold. If you hold gold in your hand, somewhat similar to if you hold a dollar bill or a euro in your hand, although those are liability-based currencies. But the monetary base of Bitcoin, it's possible that it can basically envelop all the other fiat money supplies. And you hear this a lot on Twitter, or you see this on Twitter, you see this with other comparisons like M1, M2, or even M3. These are different levels of money that people have locked up in the banking system. Some, quote unquote, on demand, some more at risk with time deposits and savings accounts and so on and so forth. But it's possible that all of that could be enveloped in Bitcoin for sure. I think that's possible. But the interesting thing is that could be enveloped by a money that has the properties of no claims, which is Bitcoin. So again, back to the old market solution from the olden days with paper, token coins, even small change, paper, bank reserves. These are all bank level, not the central bank, but bank level created media that solve the problems of transacting different levels of amounts, because it's too expensive to send the gold or the silver at certain times. So people prefer the paper. They prefer the checking account on your bank screen. Those things are still their claims on base money. So that's the important thing to understand. Is M1, which is a money supply, which is basically demand deposit accounts. The difference between M1 and base money, which base money today is just a paper dollar, basically. It's commercial bank reserves as well, but let's not get into that just yet. A paper dollar, which is that physical note that only the U.S. central bank or the European central bank has monopoly rights to print. That is base money. There is no further deduction of money with those assets. But anything else, anything above that, anything in M1, anything in a checking account, a deposit account, a time deposit, a savings account, those are all claims on the bank's balance sheet, which involves risk. It does involve risk. This is where people get triggered with fraud arguments and 100% reserve arguments, so on and so forth. But that's what the market has come up with. But with Bitcoin, we don't have to make that trade-off. If that is a problem, I think we can make the trade-off. I think you will see some people make the trade-off. Maybe you'll see it in some weird side chain. It's hard to predict, but probably I wouldn't see any reason to fractional reserve a Bitcoin UTXO, because a Bitcoin UTXO is redeemable. You can redeem that from the Lightning Network, from a side chain at any time. So I think it's an amazing improvement in transactability and payments, and it's very exciting. Like, that's one of the things we try to cover it as much as we can on our show, because we've never seen such verifiable, immutable transactability that it probably doesn't even need to be fractionally reserved, which is great, which should make everybody happy. So I don't know, it's a bit of a tangent there, Max. Let me know if you have something question or something.
No, that was perfect. I love just letting you riff on and spit out all that knowledge. That's perfect. And absolutely, man, you brought up some very fantastic points. And I do believe that we can use a lot of this, all quote unquote old Austrian theory and apply it to Bitcoin. Right? If we see, for example, just this little pamphlet, "What Has Government Done to Our Money" by Rothbard. Yeah. I've done a reading of this, and I've replaced the word gold with Bitcoin. And the money warehouse, for example, all the way down here, or probably not here first. The hoarder. There's an entire chapter where Rothbard discusses hodling and why peers hodl their Bitcoin. right? Or why the price doesn't matter, or why multi-coinery is probably not so good. And then the last chapter in the first part is on custodial wallets, right? It is on money warehouses. And here Rothbard really goes into why, let me switch back, why peers do decide to keep some of their gold in warehouses, and why this often makes sense, right? From a security point of view, of course, because you no longer need to take care of the security yourself. You have some experts that have a bigger safe and bigger guns that can defend your gold. And same is true with Bitcoin, right? You could store your own keys on your cold card, absolutely. But if you do not want to, but if you do not want to have that responsibility, and if you do not want to have full control, and therefore also the risk of losing this control over your own money, then it would make sense to store these Bitcoin at a service provider, a expert that specializes, according to division of labor, in the service of providing security to your money. Right? And that is something that we have seen with gold, of course, much more than in Bitcoin, I would argue, because it is so easy to take rather secure responsibility over your own Bitcoin, right? You can keep your own keys on your phone, and of course, you shouldn't do that with large amounts, but it's pretty damn secure, right?
Just to jump in, because I think a couple points are important there. Like, even with that sort of transfer of responsibilities you mentioned, or sort of able to ease the burden of security, ability to ease the burden with different monetary services in the private market, Bitcoin still is supreme there, because you have services like Casa, where you have a multi-sig setup where you are basically fully in control. Casa can't run away, can't do anything about fractionally reserving or creating some fiduciary media on top of your Bitcoin. They just cannot do it. Yet they can offer a service that is more, subscription based. It's more sort of hold your hand to hodl way. And that is very, very important and different than any other system that we've had. But there still is some differences. There still are some differences. And I one thing I say, how many examples do I want to use here? So we can do this like you mentioned with Rothbard, and Fritz Machlup mentions this as well. This is back to sort of the fiduciary media thing, but well, let me put that on hold. We can come back to that, but let's look at different instruments that we can hold monetarily and transact with monetarily. So let's look at the dollar. Let's look at a gold coin. And let's look at Bitcoin, and let's look at a stable coin, just to be fun. So a dollar, if you would say like, okay, I have a dollar, and how do I want to say this? I'll make some comparisons. I will contend that they're all true. And then if I say as good as, imagine that I'm saying no pros and cons. That may be too complicated. All right, so if we talk about a checking account, right? So a checking account is where you put dollars, and it's where you can easily transact. We have many services these days. We have PayPal, Venmo. We have other digital ways to transact from a checking account. And then we have a physical dollar, physical euro note. Okay, so if I were to say, okay, checking account dollar, we're as good as a physical dollar, I would contend to you that it would be a physical dollar. Okay. And remember, when I say as good as, I mean has the exact same pros and cons. So if a checking account dollar is as good as a physical dollar, it would be a physical dollar. Second one, let's look at a gold coin. Let's look at gold money, for example. If a gold money holding of an ounce is as good as an ounce in your hand, then it would be an ounce in your hand. Okay, these are true statements, I believe. We can talk about what I mean by this. There's obvious differences there. They're not the same pros and cons. There are differences. A gold money ounce on your computer screen is different than an ounce in your hand. So it's not, quote, as good as, but we'll talk about what that means. Third one would be, let's use a stable coin. I mentioned this somewhere. Might have been on one of our episodes, but I heard on Pomp's podcast, I believe it was, there was an engineer from Gemini who did the Gemini dollar. And no problem with what they do. I mean, everybody knows the Winklevoss twins are definitely going towards Wall Street and regulation, and it's a different ethos than many people in Bitcoin. Okay, but they're trying to make the best stablecoin possible, the best programmable money possible. And he made this statement, and I'm being very nitpicky, I know, but economically, I know that I'm speaking correct, because he made this statement. A Gemini dollar is as good as a dollar in your hand. It's exactly what I'm talking about here. No, a Gemini dollar is not the same as a dollar in your hand. If a Gemini dollar were as good as a dollar in your hand, it would be a dollar in your hand. It would be the same thing. And then this is the one where, again, I'm not trying to trigger people, but we should acknowledge there are trade-offs. You can say the same thing about Lightning and Bitcoin, which I said earlier. So if a Lightning balance were the same thing as an on-chain UTXO, it would be an on-chain UTXO. So the point of those four examples, I hope I somewhat made that clear, is there are obvious trade-offs between those two forms of media. There are obvious trade-offs between those two instruments. It's totally rational, normal. The market usually demands such things. Let's go back to the stablecoin idea. I believe Bitcoin will be the ultimate stablecoin, but we have this sort of short midterm confusion period right now. So people are going to try to use stablecoins to their advantage until they blow them up, which they probably will. But if Gemini's accounting for and systems in place for reserving dollars and burning and creating stable Gemini dollars is right on par with anything else in the history of the technological world, and they do this very well. They do this very securely. Still, no matter what they say, it's not the same as a dollar in your hand. Now, I'm not making a comment on the inflationary manner of the dollars or euros or what central banks do. I'm specifically talking about this instrument. It is a different instrument.
And that goes even further, right? If you, for example, have a water, just a liter of water, and you are in the Sahara, in the desert, and there is no water else around you, then this glass of water or liter of water is a completely different good than a water that you hold in the mountains next to a spring. Location and time and other factors play a big part in what that good actually is.
Yeah, 100%. Great point. I mean, there are reasons why we might want to use a Gemini dollar. There are reasons why we might want to use a physical dollar. Reasons why I might want to use an on-chain Bitcoin, UTXO. Reason why we might want to use a Lightning channel payment and see a balance reflected there. And so it is with a checking account, different services that they offer versus, again, a physical dollar in your hand. And then again, with gold, physical gold in your hand versus the electronic manifestation, which I think is best illustrated by gold money. Even though it's a great way, it's still different. So it sounds maybe trivial or nitpicky, or you might not even know why I would want to point that out. But I think people run away with ideas very quickly about why something is useful or not, or maybe fraudulent and not. And my view is that there are market reasons for all of these things, even in the case of a Gemini dollar, and we may see some success for them. But now moving on to the problem of all of this, the problem will always be once the state decides to monopolize, because that's what the state does. The state can't produce anything itself. The only thing the state can do is use force to monopolize. I say this every time, but I'll just say it again. Rothbard said this. Adam Smith said this. The traditional definition of a monopoly is a firm that has special privilege from government. That's it. A firm that has special privilege from government, that is monopoly. It's not a big company. It's not a company that has 90% of the market share and is so amazing, apparently, at providing goods that it probably came in, undercut all the mom and pops, made them all bankrupt, then raised its prices, and then it just is stuck there forever and no other person can compete. No, all of those things are just big companies. They're just companies that do things in the marketplace. But all of those examples or that example, that always will face the threat of competition. Always will face the threat of competition in the market, and there's no way to get around that in the free market. How many times was this even tried with, like, it was IBM, then it was Microsoft, then it was Google, now it's Amazon. It's the same story all the time. And, back to the Standard Oil days in the US, like, there are always these boogeyman sort of monopolists, which gouge us and do things that are very bad. But actually, if you look at the history of Standard Oil, you look at the history of all these other companies, they continually lose market share precisely at the time where we decry that where we decree and we cry out that these are the worst things in humanity. So the market will always correct that. So those aren't monopolies. Monopolies are firms that have special privilege from the state. The biggest child of them all is central banks. Money, as Ron Paul says, 1/2 of every transaction. Central banks today are the ones in charge. But I said this on Marty's podcast as well, I don't know how this will play out. Everybody's trying to figure this out. But if I could guesstimate in the next 5 years which companies would be granted monopolies in the virtual currency space, it would be precisely a company like Gemini. It would be a company that is basically a bank now. It's a digital bank. It's a virtual currency bank. It's working very closely with the fiduciary, or not the fiduciary, excuse me. That's not at all the word fiduciary. It's working with the fiat producer, that is a government central bank. It's taking their dollars, it's putting in their coffers, it's making tokens, it's burning them, it's creating them. It has this closed loop system. It may work better than a PayPal. It may work better than a bank's escrow agreement ever does, but it's not the light years ahead technology that Bitcoin is, because all it is slightly upgrading paper money and slightly upgrading state money. But if I had to predict how that would turn out, I don't actually see this, these Fed coins coming about, this government created central bank digital currency, CBDC or CBVC, whatever we're calling it, like central bank virtual currency. I mean,
Well, the fiat currencies already are digital currencies. Exactly. I mean, like the amount of real physical cash that is in existence is a tiny, tiny, tiny fraction. Especially if you count all the derivatives and other leverages on top of the money base. These are all digital. So if they put it on a blockchain, well, they can try, but it's just another database.
But that's the interesting thing, is I don't think they will succeed. Maybe one government will try it, like maybe Britain tries it or something, since they seem to be isolating themselves or whatever these days. But and they have been researching it a lot. There's been news about that. But I mean, again, I said this on Marty's show, like the central bank or the government has proven that they usually can't manage, websites, healthcare websites. So do we really think that they're going to hire enough developers? And because they can't produce anything, all they can do is hire and fire and use force. Are they really going to outsource enough competent developers to make a competitor to Bitcoin? Like, there's no way. So the easiest way of them, the path to quote unquote success, at least in the short term for them, I believe, would be doing precisely what they've always done. The Bank of England, the England's central bank, used to be a private bank. It was a private bank. The Fed was created from scratch, but the Fed monopolized the market-making powers of the largest banks in the U.S. at the time. Like Chase is still around, one of them, and some versions of some of these investment banks and banks are still around. They're the money makers for the Fed. They trade bonds with the Fed to create and destroy currency in the economy at the base level, at the monetary base level. And like you said, that is a digital transaction. But they won't be able to, I think, move society easily from their paper-based system to a virtual currency system. The easiest they could do is exactly do what they've done for centuries: take a relatively successful entity and monopolize it. And since Bitcoin has no entity and cannot be monopolized, the next best thing I see is like a Gemini. It's someone that's ready to work with them. It's ready to account for their physical paper notes, and probably eventually, those physical paper notes would be expunged for Gemini dollars or some other dollar, but these are monopolized, controlled, licensed, the whole definition of monopolies are licensed entities, basically controlled by the state. And then that's how you continue on. So I sort of tend to think that would be the best path for them to get into the virtual currency space, as they love to say. But
the
obviously they can't. Yeah, the blockchain space. Yeah. Obviously they can't stop Bitcoin. They can't monopolize Bitcoin. They try in many other ways, like maybe monopolizing mining farms or so on and so forth. But as Eric Voskuil writes and other people talk about, that transactions will just become more expensive between state mining farms and non-state mining farms. So it'd be a race to see who would lose on transaction fees there. But that's a long way away. That's very difficult to predict, and I'm not sure how that would work either. But yeah, as far as we talk about good old state monopolizing the money supply, it seems to me that stable coins may be a good shot for them. So I think they'll probably continue on that.
Unfortunately. Yeah, but the thing is, stable coins are fiat coins, and they're everything but stable. So let's see when the terminology hopefully switches from stable coins to fiat coins. And the aspect of monopoly is great that you bring it up. And this is also right regarding the ethical money production, as Guido Holzmann puts it, and applied that again to Bitcoin. Satoshi had the bootstrapping problem, right? The network was not used by anyone. Nobody was valuing it internally. Thus, no one was willing to pay for the network. And that includes, of course, paying for the security of the network, paying the miners. And because there was no payment for these miners, there were none, right? And thus, he needed to have an incentivization model of producing security. And he did that, of course, with the issuance rate, with quote-unquote inflation, with creating money out of thin air and handing it over to miners. However, of course, according to consensus and based on a voluntary interaction, so no moral problem here on that side. And then further, he had no possible way of excluding new market participants. Yes, Satoshi was the only miner in the initial days, right? But there was no possible way for him to, in any way, enforcing that he would stay the only market producer of blocks of security in that sense. And, therefore, I think Hal Finney was the second miner. And then, more and more and more entrepreneurs started being part of this system and providing a service, which is block space and security, of course. And in that sense, there has never been and there will never be a monopoly in mining because you can mine with a pen and paper. That's literally all you need. It's going to take a bit, but it's possible.
Sure. Yeah, completely agree with that point, Max. I think, and that scares a lot of people who I think probably even much smarter technically people than I am. It scares them still, this sort of mining monopoly. I don't tend to worry about that because I don't think that that's a monopoly in the correct sense of the word. Correct sense of the word would be if a state gave the miners license. But as we've seen, with Ghash and I mean, how many times over, maybe with Bitmain, these miners have a very difficult time competing with others. And that's very interesting economics, but it's not a monopoly. You're right.
Yeah, and then, although, these miners are being paid by newly created money, and I do believe that there is malinvestment and overconsumption, although, it is known the issuance schedule and it's voluntary, but still, right, it distorts the price levels. Transactions were cheap in the direct payment of transaction fees, but rather expensive if you count then the inflation schedule within or issuance rate. And then that leads to centralization of the money producers, right? And that's, we have companies like Bitmain, who were, of course, one of the most successful businesses producing Bitcoin, or I know, not producing Bitcoin, that's the wrong word. We let them produce Bitcoin.
Mining Bitcoin, yeah.
Mining Bitcoin, yeah. And however, we see that even those, like even the giant of chip manufacturing and running them, they're pretty much gone now. I think like the third quarter was what, 750 billion in losses. I mean, that's a lot. And you know, if you have such huge losses, that's how the market works. When you are malicious to other network participants, and when you buy a ton of Bcash, I mean, you're gonna get burned, and nobody can come and bail them out. That's another beautiful thing, right? Times 2009, January 3rd, bank on the brink of chancellor on brink of second bailout for banks. Well, Bitmain is not going to get bailed out. They have to carry these losses, and they simply cannot produce Bitcoin out of thin air to to pay for them. There is no inflation in that sense, that in newly created money out of the ordinary, out of the agreed upon issuance rate, can be used for bailouts. Yes. And that just shows further that the market in that sense works. Like, yes, companies, if they provide a valid service, will grow and prosper. But on the other hand, when they stop being of use, when they stop providing a valid service, they are going to get excluded from the market just simply because they don't have enough Bitcoin left.
Yeah, and it really is incredible that such a system has been developed where it's precisely as you say. I mean, the difficulty adjusts and the issuance rate stays relatively the same, and miners go on competing for the same known quantity of coins. And I would probably even take your statement a bit further or adjust it a little bit, because I still think I agree. Mining revenue absolutely encompasses those new coins, but at some point, mining revenue will cross between new coins and just transaction fees, and then you'll see how the system. Well, I guess we will see how the system is will react to really what the system is about, which is confirmations. It's a confirmation market. It's not just about a lottery for new coins. Like I think Satoshi said it in the white paper. Maybe was that uh, the block reward was basically a way to distribute coins in precisely the manner that you say, with no special privilege, with no monopoly license. It's just a way to distribute coins. So really what it's all about with Bitcoin, even though it's hard to see right now economically, really what it's about are transaction fees and the confirmation market and how that will work in a competitive environment. That's still scary. Yeah, go ahead.
I really like the episode of Crypto Voices where I forgot the guest, where you hammer home that there is no fee market, that there is none. It's confirmation market, and you pay a price for that. You pay a fee. The price, the transaction fee arises out of the market for confirmation. And absolutely right. When the subsidy decreases, the indirect payment decreases that all the hodlers pay, and everything that is left will be a direct payment by the individual who is actually trying to get his transaction confirmed.
Yeah, I fully credit Conrad Graf with that point. He's written some interesting things about the block size limit debate. Before going maybe into some of his views there, we don't have to go into those, but what he describes as the fee market is completely correct in my view. He uses the word transaction inclusion service. I think just the word confirmation market is simpler to use, but that is exactly what is going on in Bitcoin. Is it's a market for confirmations every 10 minutes. If you don't need to make a payment, then you don't. If you do, though, you want a confirmation, and you have to pay for that, just like any market is. And it's confusing. I think it's an unfortunate name. I still don't comment on any sort of technical thing, but the way that term developed, fee market, is an unfortunate term, because there's no market in the world, the history of the world, where we've ever described the cost of doing something as the product. Like that's not the product of what's happening every 10 minutes. The product is a confirmation market between users, merchants, buyers, sellers, miners as well. They're all part of a confirmation market, buying and selling confirmations. And that is what we need to understand is what's happening every 10 minutes in Bitcoin. It's not a fee market. The point of it is not to have high fees or low fees, just like supply and demand and equilibrium. Who knows what those appropriate amounts are? The market is always tending and trending one way or the other, falling towards equilibrium. It never quite hits it. New entrants come in competitive markets, unsatisfactory incumbents leave. This is that's just how markets work, and so Bitcoin it gives me great promise for just going back to everything we've been talking about, like the monetary system functioning healthier in a more healthy way than anything that's ever happened in the history of money. It's really incredible to see. But yeah, I think that will continue to be an interesting debate. And I hope that eventually someone just stops using fee market. I don't think it will, but if we start using confirmation market, it would be, in my mind, a better thing, because that's really what keeps Bitcoin. That is what keeps Bitcoin moving are the fees, and that keeps the anti-fragile nature of it and competitive nature and so on and so forth. Uh, what the fees should be as well is an argument that I wouldn't want to get into or wouldn't want to deal with, and we saw that a lot with the block size limit debate. I'm sympathetic to, unlike what many people may view, but I'm sympathetic to Bitcoin cashers or B cashers. I'm sympathetic to their view to want to try to preserve economic on-chain pureness, like to keep the market purely functioning without sort of any cap or limit in the throughput. But as we've been talking about with the banking system and the gold system and security in the past, like there's just trade-offs. Like economics is basically about trade-offs. Austrians recognize this, many economists recognize this, and you can't. What would we say? I mean, do we really want to just blame everything on censorship? What do you say when the vast majority of Bitcoin core nodes or Bitcoin, QT nodes in the past, like Satoshi put that limit in place in 2010, I believe. I think it was like September of 2010, and it's been a very, it has been a linchpin of debate, but it also has been clearly a security parameter. So though I'm sympathetic with the idea of preserving economics as free as you can, there's just natural trade-offs, even in a digital good like there are with physical goods. And credit to all of those, early people running nodes and, perhaps even as they would look at it, thwarting attacks or moves from other competitive implementations, which they don't think will preserve the security, the decentralization of the network. Credit to them for doing that. But again, trying to describe things accurately, and again, I don't want to trigger people, but I'd like to hear your thoughts on this. Conrad Graf actually made this point as well, maybe in the same article where he talks about not calling it a fee market. This block size limit, and I always try to use the word block size limit instead of block size, like, or big block or small block, or like the key economic point is that there's a limit. It's not anything else. There's a limit in block size, but there's not a quote block size. It actually says, what does it say in the consensus rules? Max block size. There is I think it says max block size. That is a consensus level rule, by the community as a security parameter. And we've never actually seen that. Bitcoin breaks all the rules in many things as far as free markets go, but we've never seen a market that has voluntarily capped its throughput, as far as I know. Like any cap of a throughput actually, and again, I hope people don't get triggered by this word. Conrad Graf uses that. I agree with it. The only time you would see in the free market a group or groups of individuals cap throughput is in a cartel. So Bitcoin strangely represents some kind of a brain cartel where the nodes, those running the nodes, want to cap the throughput. And I don't say that they cap it because they want artificially high fees and this and that. It's clearly, to me, a security parameter first and foremost. But There is no other market where that's done. And another interesting thing with cartels is cartels will, just like monopolies, they can't work long term in the free market. So OPEC is an example, right? If OPEC producers or individual oil companies in OPEC nations wanted to let a cartel run, again, what are we talking about? Put a cap on the throughput of supply of oil. So they want to limit the supply of oil. They can do that. They can collude. They have geographically abundant resources, so on and so forth. And they can do that, and they do that. They have done that since the 70s. But the cartel actually falls apart pretty quickly in the market. You need governments. So it comes back to a government thing, a monopoly thing. You actually need governments to enforce the cartel, and that is OPEC. OPEC expressly limits the supply of oil. It is a cartel. It doesn't work very well, even with the government support. Russia gets in there, messes with OPEC. The U.S. is now the largest supplier of oil in the world. A lot of people don't know that. The U.S., after fracking and other things, I forget how many million barrels of oil it is a day versus everyone else, but they are slightly ahead of everyone else now. So cartels don't actually work for all intents and purposes, but that is what a cartel is. OPEC is the best example. They expressly limit the supply of oil so that they can have a price that their pensioners and families and communities and countries are happy with. That is what they do. I mean, it's a cartel. So Bitcoin, very interestingly, and I credit Conrad Graf years ago, he wrote about this with the block size limit debate. I'm not trying to trigger people with calling the block size limit a cartel-like limit, but I don't have a better word economically to describe the block size limit. And now I understand it's not 1 megabyte. It's a weighted 2.3 SegWit weighted limit, I think is the term. It's still a virtual limit of 1, right? But it's a SegWit weighted 2.3 limit. But the point being, it's a community-based limit. Do we call that a cartel? Probably not. That would trigger so many people, and they would think that I'm like a Bcash or something. But I'm not. I'm looking for economic ways to describe something, and throughput is limited in Bitcoin by consensus, by the community. The community wants to limit throughput on chain for security reasons, no question. But this is the whole reason. I mean, obviously, this debate has been talked about 10,000 times, but this is the reason why it's done. It's for security. And then this is the reason why people split off. It's for economics. They think their economics are better and not as susceptible to security. Bitcoin Core thinks that it is security. And it doesn't even matter what I say anyway, what I call it. Bitcoin Core nerds are going to do what they do, and they have done what they've done. And there's no, you can't claim censorship is like the reason why they do that. They do it because they believe that that's a consensus rule that will keep the system secure and decentralized, which is great. And I run one as well, so I'm doing it as well. But the name of the limit, the name of the throughput limiting factor, I wonder economically what we will call this in 10 years. But
it's
a brain cartel. It's a brain cartel economically.
And I tend to agree. But I mean, first and foremost, right? A protocol software, it starts out with limitless options. You can do anything you want. And then every line of code that you add is a restriction on these possibilities until you end up with the finished software that then is inherently restricted in many ways. But well, that's just how it works. So yes, the block size limit is a restriction, but I mean, so is the routing protocol. So is the coin supply, of course. So are all the other aspects. The signatures are all inherent limitations, but they are needed in order that there is anything after all, right? Yeah. And so from that sense, yes, it is a limitation. And is exactly 1 megabyte, or now I think like with everything, it's up to 4 megabyte. Is that the exact right number?
Yeah. Yeah.
Well, no, it's not the exact right number. Like that is what I can say for pretty much certain, is that 1.0 megabyte is wrong.
Yeah.
It's either a tiny bit more, tiny bit less, maybe a lot more, maybe a little less. But after all, every individual values that for himself.
Yeah.
So having this limit is a economic net negative, as you pointed out, and I would agree with that. It it is centrally planned. Well, it is planned, not necessarily centrally.
Community planned.
Community planned, exactly. And
Yeah.
and then to your point of the cartel, it makes a lot of sense. There are a lot of similarities, and I think that's just what consensus is also. I would say that a cartel is rather backed by violence and aggression,
Yeah.
but a consensus-based network is based on the voluntary agreement and the voluntary entrance and exit of this consensus network.
Yeah.
But because we only are on the same network when we play by the same rules out of the unlimited possibilities, well, then yes, it is kind of a cartel.
Well, and I'll just point out again quick, because I don't I'm not looking at the chat if you have one, but any listeners who might be triggered by the word cartel, I'm not at all making the claim that that is a bad thing. It's just, like you just said, Max, consensus might be the best word to just use, and no one quite knows what consensus means anyway. But like, it is a consensus based limit, and that's great. But the interesting thing, looking back at history, and I like doing that for better or for worse, and maybe it's incorrect, maybe it's an incorrect comparison, but and I would concede if everyone wants to 10 years from now admit that this is just a new consensus thing that we've never had in the history of money and banking and economics and production. But we do have a set of rules that this one in particular triggers a lot of people. This limit, this weighted limit, and it triggers a lot of people a lot more than the 21 million. And who knows, maybe the 21 million is going to start triggering people in a few years when we quote unquote don't have enough inflation, enough new bitcoins to keep the miners incentivized, so on and so forth. I have no idea what's the enough amount. I have no idea. I think it's arbitrary at the end of the day. But the only point, and Conrad Graf made it first, I do agree with at least his analysis, is that interestingly in markets it's not like, other than a collaboration between companies to limit throughput, we've never, and no company wants to limit throughput. I mean, it will try to do as much as it will naturally be constrained by many resource factors, but no company tries to limit throughput individually. They will constrain themselves naturally. They will be constrained, I should say, naturally. But it's and again, the fact that it's community based is even more interesting, because it suggests it suggests consensus. I won't say collusion, because it doesn't. But these are interesting things to look at. And anyway, it's not anything I've written about or I run home about, because I very much agree with the decision of Bitcoin core nodes to do what they've done. And it is, but I sympathize with why people feel that there can be other ways to do it. I do not agree, but they prefer economics over security. Bitcoin Core prefers security over economics, and those aren't far ends of the spectrum or this and that. Like there's middle ground, there's trade-offs, there's all those things. So it's very interesting. But I think, yeah, probably the better point to to come out that Conrad said, besides a cartel-like limit, is getting rid of the word fee market, because that's not true economically at all. It's not about fees. It's about confirmations. That's the product. That's the product.
Absolutely. Yeah. And but really, the cartel argument is interesting, and precisely because it doesn't work, right? Centrally planning somewhat centrally planning does not work, especially in the long run. So maybe having a more market-based approach on setting the block size limit would be compelling. I'm not sure how you can do that without giving one party the complete authority over what it should be.
It may not be a comparable thing. Yeah, we may be off base with that comparison, right? I agree with what you just said, but maybe maybe I'd concede the point in 10 years that it's just not what it is. Like, it's not comparable to to the gold market, gold miners colluding to cap the production of gold, to raise the price of gold. That's the only thing I can think of in the market. And then government's backing that, of course, because that's the only time it works. But that's the only time I can think of any reason why you'd want to have in the free market, you'd want to have the supply intentionally restrained.
And that is there's a interesting segue now that is nice, is that
Sure.
you said that it does not limit the money supply, and that is completely correct, right? But it does limit the throughput of the blockchain. But those are two different things, right? You can use Bitcoin without a blockchain. For example, you can use a open dime to transact securely and scarcely the private key information from Alice to Bob without doing a Bitcoin blockchain transaction.
Yeah.
And of course, the security is based upon the block confirmation and everything. And but we see though that even with the Lightning Network, you can do Bitcoin transactions. You can transact the base monetary asset, the N value field of a UTXO. And you can do that without necessarily relying on the blockchain confirmation. So because we have different ways of transacting Bitcoin, the throughput on the blockchain is might not be that important.
Yeah, good point. Good point. And you can have it actually happen on the other way, which is the thing that Bitcoiners and 100% reservists should be against. I'm not necessarily against, but I think it could be against it, and if it shows to be massively problematic. But you can also transact off-chain via exchanges today, and they create virtual Bitcoin all the time, and it's shown clearly with MTGOX and others, Bitfinex, that there have been not perfectly aligned reserves, virtual traded Bitcoin, on the exchange layer versus what are actually deposited with the exchange. And so that actually is very, very analogous to an M1 system that we have today. That's basically M1. Now, if that's problematic or not, I would say it is, because, again, going back to what I said before, Bitcoin, you just don't need to have such trade-offs in Bitcoin. And Nick Carter, we had him on a couple weeks ago. Has he ever been on your show, Nick?
No, but I really would love to talk to him.
Yeah, he's great guy. Definitely try to get him on your show. But he so he said this on our show, like, he's going to die on this hill of getting exchanges, getting people to demand that their exchanges are not fractionally backed. And I agree with that point. But they have definitely been fractionally backed in the past, and that is 100% the same thing of how M1 works today. So exchanges basically work just like M1. We don't know for sure, except for maybe one or two who really publish their reserves, or some way of how the Bitcoins are sort of settled. I don't know how it works. I haven't looked into it myself, really. But, obviously reputable exchanges we appreciate, but those that aren't, they're clearly, acting in a way that's irresponsible, and the market has caught them. And it's very reminiscent, in fact, of many M1 bank runs in the past. But I don't think that I'm advocating for that one, because, again, I think Bitcoin is better. There's no reason to fractionally back Bitcoin. It's just a question of getting the fees right. At least I don't think there's a reason. I don't think there's a reason to fractionally back.
Yeah.
If some off-chain fee solution really is better and people are ready to do that, but I don't think it's going to happen that way. I think the more interesting thing that will be interesting is if credit markets start to develop on Bitcoin, where you have
that is interesting. Yeah.
Direct at risk Bitcoin at interest. Where the hodler is now saying, okay, I'm ready to not hodl. I'm ready to put money at risk and earn an interest rate, earn some rate of return. And whether that's done through a Bitcoin-based bank or a investment arm of some exchange, I think some of these things are already starting already, but really not in any way that's manageable, because Bitcoin's too volatile to demand an exchange rate that's that's reliable
Yeah.
at this point. But
Unfortunately, we'll get there.
yeah, but we'll
Maybe.
get there. I have no doubt that Bitcoin will be the ultimate stable coin from that side. So those things I think are very interesting. But
And
this is,
truly
yeah, go ahead.
stable, right?
Yeah,
Truly stable, not because of the purchasing power, but
yeah,
especially because of the money supply, right?
yeah,
And to your point of exchanges, a very very good point. And I would like to bring up here Voltoro, which is a Bitcoin and gold exchange,
yep,
and they have a incredibly transparent auditing process, both for the gold that they have in a physically allocated vault, and especially the Bitcoin. So to the Satoshi and to the milligram, how many gold or Bitcoin they have in their vaults.
yep,
And further, you have your cold wallets precisely right here. And then I can't find it right here. Oh, yeah, a client list right here where you see a public ID and exactly how many gold or how many Bitcoin they have in the hodlings there. And
yep,
the individual client can, with some hashing algorithm, hash his personal address to precisely this public ID. So in that way, you know exactly, and you can verify on the blockchain on your own full node if this is actually correct, right? So right here we have like hyper transparent way of doing full reserve Bitcoin and gold wallet or custodial service providing.
yeah.
And that is beautiful, right? Especially because I know that Voltoro is heavily planning on integrating Lightning Network, so you can easily snipe off a couple of gold ounces with the Lightning Network from the order book, which is fantastic.
Yeah.
But just seeing this here
A
of
couple
what is
grams, maybe you would say. Yeah.
yeah, probably. Well, with multi-path atomic payments routing, then we actually might be able to buy a full ounce over Lightning.
With fees. Oh, I thought you were talking about savings and fees. Uh, yeah, yeah. No, totally. I'm sure that you could do an ounce in value over the Lightning Network for sure, for sure. Um, yeah, I totally agree. And I think Josh is a great guy. I actually met him first time in Santiago de Chile. Was down there to support Fernando a little bit. He gave a speech on what is a dollar.
A shitcoin.
Exactly. But yeah, I totally agree, and I think that this will be very interesting to see when, just like in gold money. So just like in gold money, as we talked about at the beginning of the show, where you can now gold money is starting to interestingly offer gold at risk basically accounts where you can invest your gold, you can lend your gold, you can borrow on your gold. Uh, those things will come to Bitcoin. I mean, obviously they're already here with like Salt and Nexo or whatever those companies are called. I haven't tried them, but like you can borrow in crypto, uh, but we really haven't seen, and we won't see until it's stable, or at least the volatility is way down. Like true investments in Bitcoin, and this will be an amazing, I think, solution to all of the Austrian debates about 100% reserves. It will be a solution to regular old problems with FDIC and legal tender, as we know, because that's going to really set up a credit market where you can just, people that have less of something can make a pitch and make a case to, through their productive hard work, generate that investment back plus interest, and you will be able to put some Bitcoin at risk. And the interest, I imagine, people get confused about where the interest comes from, but I imagine just like anything else, it will come from those that invest poorly. So those that invest well will, receive gains and reward from their investment, and that will come probably at the expense of those that invest poorly in that system. It's still a non-inflationary system. There is no, you don't need interest coming from the fractional reserve, as far as I know. This is something I'm not so sure about myself. I've heard, back to the fractional reserve argument, people, free bankers. I've heard free bankers make the case that interest, you wouldn't have as much interest or maybe even any interest unless you had fractional reserves, fiduciary media, bank created media. And I've heard even 100% reservists concede that point, that, yeah, probably most of the interest comes from bank created media, fiduciary media. Bank, again, notes outside of the monetary base. I'm not sure that's even needed. I don't know. I don't have enough maybe research on this point or understanding, but it seems you can still lend Bitcoin at risk, even in a completely stable, maybe even a deflating price environment where your Bitcoin becomes a little bit more valuable every year, because again, profits are made on the margin. So same old Austrian thing, right? Holzman and everybody talks about this, that your marginal revenue can fall literally nominally because prices slowly decline, but your marginal costs always fall, just like happens in the tech world today. It doesn't happen in the grocery store world, but it happens in the tech world, where your nominal revenues, as far as price is of your goods, fall, but your costs also fall. So I don't see why that wouldn't work in Bitcoin. And I don't see why interest that is above hodling sort of returns wouldn't be generated from other people's failed investments, from those that make losses, those that can't compete. Their coins move to stronger hands and better investments. And I don't see why you can't have interest coming from, if it were just a purely Bitcoin world and no fractional reserves, I don't see why you can't have interest. But I will admit, I'm not. Some free bankers and some fractional reservists and some 100% reservists even say that, yeah, actually probably most of the interest comes from fractional reserves. I don't know how that will play out, but that's a very interesting topic too.
Yes, and credit markets are extremely important, and they allow savers to invest in a sense, right, into other businesses and ventures, not directly with an equity investment based on the profit of this venture, but simply.
Yep, I lost him, Max.
Oh, okay. Thank you for letting me know. But yeah, the credit markets are important, and the question would be like, how can we make sure that this will happen in Bitcoin, especially when there are credit alternatives in weak fiat money, right? You are incentivized to go into debt in fiat because, well, it's going to lose in value anyhow, so you can pay back with the same nominal amount of fiat, but with way less purchasing power, especially when hyperinflation will hit soon. And then on the other hand, right, with gold, a very, well, it's not this inflationary, but a very hard and sound money supply, which means tendencies that it will go up in purchasing power. Right. And thus you're incentivized to not go in debt, right, but rather save, which is good, especially like from a cultural effect on what fiat money and hard money, the differences here. But do you see that there will be a credit market on Bitcoin only, especially considering the quote-unquote competition of cheap money?
A couple things. So I wouldn't call myself a Bitcoin maximalist, but I do believe that there could only be one money. So if there's only one money, maybe I'd be a Bitcoin maximalist. But I don't know for sure. I don't know. But I do believe that there could only be one money, and that could only be Bitcoin. One other thing regarding the current sort of fiat world, I mentioned him earlier. Fritz Machlup is a good Austrian that a lot of people, I think he's underread. What is the title of that book? Which I think is good. And he talks about hodling as a proper check on, his book is The Stock Market, Credit, and Capital Formation. You can get it for free on Mises.org. You can get it many places online. He makes very interesting statements, which again, I think are in favor of old school fiduciary media not being a problem. Again, fiduciary media is fractional reserves, bank created notes. Again, not assuming a distortion from a central bank, but let's just say that we're looking at a market, and as the old Hayekian triangle, Austrian business cycle theory goes, investments start to occur that are not backed by savings, right? So banks have some cash in their coffers, but they also start to create claims on that cash that are well in excess of that cash. So, fractional reserves, fiduciary media, investment not backed by savings. That's what we're all getting about here. Obviously, the largest distortions happened with the central bank, but even if there was no central bank, we saw that this still happened. It did occur even in economies with no central bank. But Machlup makes the point that, we have this counterbalancing force. It's very difficult to measure, but we have this counterbalancing force called hoarding. Savings not backed by investment. Savings without investment. That's a hodl. That's a hoard. And he wrote that book in like the 20s. And that he studied with Hayek, maybe studied under Hayek. I think he studied under he studied under Mises.
And Mises, yeah.
Yeah. So he is he popular where you're from at all?
No, I actually have not heard of him. So thanks for the book recommendation.
Yeah, so Fritz Machlup. So he has a very interesting view there, which again I think is friendly to the free banking view. It like let the Austrian theory go. It can work. I mean, it can explain the market, but there is something that's hard to measure, which is, you know, the business cycle starts when you have too much investment not backed by proper savings. But we also have this other counterbalancing force, which is savings not producing investment, hoards. So people can take cash out of banks, people can hoard gold. There are all sorts of ways where you can, even he makes the point where you start the inflationary cycle, but then you stop it. You match it by people taking out some of that fiduciary media out of the bank. So there is always this counterbalancing force, which again is another, I think, it's a way that makes free banking or fiduciary media not seem that bad. If we look at that though, and we assume that clearly hoarding is in Bitcoin, hoards happen in Bitcoin all the time. This is the meme of Bitcoin. We don't have that credit market yet. Can it develop? The free banking view would be like, well, maybe it can only develop, but only if you have a fractional reserve, only if you have like some exchange created media, and then that's lent out, and then that produces interest. I'm not sure it's possible. I mean, I'm not sure it's needed. I think once you have, your lightning channels, that balance, and I understand that these balance because it's even be mixed with splicing and things, but you have your lightning balance, you have your on-chain balance, you can also have your investable balance, and that is Bitcoin that you are sure is now not allocated to you only, but you're putting it to a third party. You're ready to lend at interest. It's sort of like what I just said before. I don't see why you couldn't have that happen and have that work. Again, your interest would come from the out competition, the out competitive returns from those that fail, basically those that are at interest but losing, because that's a zero sum game in Bitcoin. I mean, if you're going to put money at interest and you risk losing it, you could lose it, and it's going to go to those people that invest wiser, that lend wiser, and allocate capital in a more wise fashion. So I think that can totally happen. And
are these ICOs?
No. I'm just talking about taking Bitcoin and putting it, like, lending some Bitcoin to build a house, or to build a productive office building or a productive factory.
But I mean, ICOs could be a part in that, right? You give your Bitcoin away, you get a token in return as a kind of certificate of the Bitcoin that you have given. And yes, it's not yet. I don't think it has happened yet that you get paid back denominated in Bitcoin. But I mean, would be possible. It's similar, but it's more of an equity investment than a credit investment.
So that's a good point. What I was just talking about mostly was debt, was loans. I was referring to fairly old hat banking, which is allocating IOUs. It's taking capital from some place where you have it, allocating it where you don't. Bank loans are usually the large portion of any capital investment anyway. Don't have to be, and they weren't always in history, but they are today. I was just referring to lending to the credit markets. ICOs, token money that's maybe created on a side chain of Bitcoin, or maybe just some other competitive blockchains continue on as these equity chains. I don't have an answer for that, Max. I don't know how that will develop, but I do not think equity is going to go away. I think that equity tokens will be around in mass. They will be administered more properly than Caitlin Long has pointed out. There's Dannon. Is it Dannon or Dole? There's some major companies that fractionally reserve their equity certificates, which is just insane. I mean, how, like, that's obviously it's one thing to fractional reserve fiduciary media, which is in the form of bank credit that in a convertible system you can run on at any time if you think the bank's not managing its investments, its balance sheet well. But a fractionally reserved equity system where actually more equity shares are created than they said were created, that one to me doesn't make any sense. So I don't know how that would play out in a Bitcoin system, but certainly tokens, ICOs, I don't know, some different form of equity. I hope that it happens. And I will say this as well. One thing that I don't like, or I don't feel like, again, I altcoins, they don't bother me. I think most of them are scammy, and most of them are causing problems in the markets. And this should surprise no one based on the last year that we've had, right? And just the nonsense that was occurring with like Tron or something, and like they really think Tron is gonna become the next digital silver or something, or whatever they're trying to do. Those 99% of those coins are meaningless. They're not based in any real capital allocation scheme. They're probably scams. But I would say that it doesn't bother me that people try, and I really don't like the again, it doesn't really matter what I like or I don't like, but I would never come out against even an Ethereum ICO token in favor of the SEC, like bringing them down. Like, hey, come on, government, go regulate these scam coins. The free market does a pretty good job by itself. We have the best chance ever to see the free market compete where it can't be centralized, it can't be corralled, that regulatory capture can't happen, by a monopolizing government entity. So again, I'm not saying anything positive or negative about what the SEC is. Well, I guess it's negative. What the SEC is doing with Ethereum ICOs right now, really trying to bring down the firm hand of the state. And then if Bitcoiners would like cheer that on, I would not be one of those Bitcoiners that would cheer that on, because I think any SEC involvement or any further government oversight involvement is just going to prove to be mismanaged, cumbersome, not done properly or in a market fashion. And all you need anyway is caveat emptor. I mean, this is what markets are about, is let the buyer beware, do your own due diligence, take responsibility. This is what Bitcoin is about. So I don't take pleasure in seeing the SEC bring its iron fist down. And nor do I think cryptographic, decentralized ledgers, even if Ethereum isn't a good one, we'll see if it is or not. It's showing to be, tough in the marketplace right now. But these are global things. These are not, this principle is global. It should be competitive. It should be naturally reinforcing, like the market does. And if we can, and I think Bitcoin is showing this the best, if we can keep the system decentralized enough, secure enough to compete with and keep out any monopolizing entity, any cartelizing entity, let's use it that way, in a bad way, then that's fantastic. So I hope that Bitcoin will continue to do that. If only the only ICOs that occur in the future on Bitcoin, I think that's great. I have no problems with ICOs as a principle, as a force in the market. I mean, even though it's a specific bootstrapping growth model of Ethereum, like I think on their original conference, like they made the explicit claim with like 13 lines of code, you can raise anything you want. They made that claim. That was from the beginning of Ethereum's ethos, making it easy to raise money in their ecosystem. Well, they made it happen. That was their killer app. And then it all came crashing down as expected. So none of this seems to me that like it merits. It screams to me of statism. Like it screams to me of Keynesianism. Like you were that dumb to put your money in XYZ ICO and be surprised if they ran off with the money, or you didn't get it back, or your token is worthless. Like you don't need an SEC to tell you that. You don't need that for Bitcoin, and you're not going to need that for other equity tokens. So that's all I'd say about equity tokens. I will admit I haven't thought enough about if it would form on Bitcoin or if it would form on, I don't know. Have you read any good topics on that regarding how equity on Bitcoin could form?
Well, the sidechains I think are a interesting method for that, and especially the liquid sidechain, which is already up and running, where you can issue confidential assets. So it's a little trick that combines confidential transactions with kind of a serial number. to create, was it? I think it was fungible tokens. So you can create fungible tokens that only you, as the creator and owner of the de-blinding key, can also see which exactly it is. So it is indistinguishable if you make a Bitcoin or a liquid Bitcoin transaction or a transaction of some asset that you created on top of of that sidechain. So stuff like this is possible, and I mean it's super compelling, right? And apparently it's extremely easy to do that, or just the 13 lines of code, and then you can raise your money. So it's interesting. And I mean, I don't have any, like, as you said, like a blanket statement that ICOs are bad. Quite on the contrary, like ICOs are pretty much the entire point why we're doing this. Like we are doing this for financial self-sovereignty and freedom, and that includes printing your own money and or token and selling it to others. Like and that's what Satoshi did. Yeah, okay, he didn't raise money for it, and that's why it was ethical money production, in my opinion. But nevertheless, like even if you have people who are selling their shitcoin for true sound Bitcoin, well, as I said, caveat emptor, as long as it's peaceful, as long as it's voluntary, they're free individuals engaging in mutually beneficial trade, right? Yeah. Every purchase of an ICO was mutually beneficial, at least before the trade happened, right? Now, afterwards, we know that it was probably not that mutually beneficial, but at the point of purchasing the ICO, both parties were better off.
My favorite quote of all time in like finance, I said this at the HODL conference, was by an investor named Rick Rule. He's the head of Sprott Asset Management in the U.S. He's a long time cyclical commodities investor, gold, silver, oil, uranium, platinum, palladium, pick your commodity. He's been successful in investing in it and financing it and raising for its mining or its production. He says this statement, which is just amazing. He says, no matter how good, how efficient, how wonderful, and how horrible you think the government is at printing money, the free market will always do it better. And that phrase to me just encompasses what we're talking about. Just what you're talking about, Max. Like, what are corporate bonds? What are stock equity certificates? What are I don't want to say government bonds. Let's corporate bonds, penny stocks, equity stocks. This is paper printed by the free market, where you're receiving a token in exchange for real money, or at least something very close to real basic money, usually M1. But that is the free market going crazy, printing money outside of the purview of the government legally. And those things, I think, just like you described it, liquid side chains, and if this happens in a rootstock like fashion as well, that can happen. That's printing money based on someone's individual promise, and there's nothing wrong with that. Nothing wrong with that. How that shakes out with, at the end of the day, interest, that is debt returns versus equity-like returns, and how that shakes out with the Bitcoin money supply, I'm not sure. I think it'll be interesting to watch, but I don't see why none of that would be possible, and I don't see a deflationary debt spiral or stagnating economy. Quite the contrary, with the Bitcoin money supply, and I'm happy to see a 100% reserved M1 liquid. Not M1, but it's really a 100% reserved monetary base supply circulating around as money. And, if you want to put a little bit more quick spend at risk, but not really, low fee environment going on Lightning or sidechain, I think you should do it. You should be able to do it. And then clearly allocating it for investment as well, you should be able to do it. So those are nothing but good things that I see for the world of Bitcoin.
Oh yeah, 2018 was the best year for Bitcoin, in my opinion. Price was down, but I mean, who cares about the price? Like, that's boring. Yep.
It's not about the price.
Yeah, the stuff that was happening in the back end, right?
Yeah.
Was mind blowing. I remember like over a year ago, like early December 17, where I made my first Lightning mainnet transaction, like hacking, copy and pasting in the command line. Route failed like 15 times before the payment went through. And now we have mobile wallets, browser plugin extensions, like paper API call, games built on Lightning within 1 year. I mean, as you said, like and that is all. You know, your quote with that the free market is good at printing money. Yeah, of course it is. But it's also damn good at making good use of true money. And I do believe that Lightning especially is proof of that because it's breathtaking.
Yeah. And if the free market prints money in a bad way, it's very quickly caught. It's caught and it's understood and it's arbitraged away. And really, I think it's probably the story of what happened in 2017, 2018. I mean, the quickest rise in any asset value on a macro level, perhaps ever. It's definitely faster than it happened at the .com period. Although the value is well below that. I mean, $5 trillion worth of wealth collapsed. 5,000,000,000 based dollars, which is well more today, lost value in from 2000 to 2002. So this is nothing. We've seen nothing yet. And if you think if you think the volatility is going to stop, I don't think it's going to stop. And I do, and that's another thing. Like just going back to basic Bitcoin, I mean, there are two facts that we know. Like we know the supply, we know it's not inflationary, and we also know that not everybody can buy Bitcoin and move to Monaco. If you want to move to Monaco, if you want to go wherever you want to go, so those are facts. Like those are absolute facts with resources. The supply is limited. Not everyone in the world can buy it and retire. So it's a unique opportunity. That to me screams a unique opportunity, not investment advice, but it also screams volatility. Like the thought that Bitcoin can sort of grow slowly, it can grow at a nice, I don't know, 20% a year appreciation of the euro or dollar value. It will not be longed or shorted the hell out of by competitors or the market. None of those things seem to be true for just the very nature of the beast. I mean, I could see massive spikes, like massive, like we had, we started 2017 at 1,000. We finished it at 20,000. Now we're back to 3,000. I could see that until we get to hyper Bitcoinization or we get to referring to things in Bitcoin and Satoshi terms, I could see that being 10 times higher, that volatility, 100 times higher. I mean, it could go to 500,000 and never come back, or it could go to 500,000 and come back to 100,000. It's very difficult to predict. That's an exciting, if you put on an investment hat, maybe that's an exciting opportunity, but you got to be ready for it. And probably more important than anything is validating yourself. And like you said, there's so many amazing ways to do that now that's just never been possible in the history of money. So it's really exciting.
Oh yeah, absolutely. And I know the last couple of days, the German stock index, the DAX, crashed. It crashed 3% in 1 day. And my colleagues lost, unfortunately, a bit of money, which of course sucks. But when they were quote unquote bitching about a 3% volatility, I was like, you merely adopted this volatility. I was born in it, molded. I didn't see stable purchasing power until I was already a man.
Oh, that's funny.
So I mean, and that's something that on the Tales from the Crypt podcast with Dan Haddle, he pointed out that we see so much volatility and so many boom and bust cycles in such a short period of time. And this, yes, you can make a lot of money, you can lose a lot of money, but that's boring. But the experience that you gain out of that and the knowledge and understanding of markets and capital allocation that you can build up with this is tremendous. So, when Bitcoin is only 10 years old, right? When we are like 50, 100 years in, and we've seen like 10, 20, 30, 50 of these boom and bust cycles, the long-term hodlers will be so damn good at allocating their capital that, again, it will just foster true capital accumulation and quality investing, not in plastic planned obsolescent crap, but in actual sound investments that are valuable for future generations as well.
Good point. And no doubt, there's no doubt in my mind, and whether you're 100% reservist or a free banker, there's no doubt in my mind that the culprit is the monopoly of the central bank. Like, I would die on that hill that it is the monopoly that is the problem. If you want to put one word, it's the monopoly. It simply means that it's a firm with a special privilege or license from government. They are the culprits. Stay away from that. You can make money from that, by the way. Bitcoin is showing to make money, I think, in a way that is breaking that monopoly, quote unquote, breaking. But that happens all the time. I mean, that's the Doug Casey uses that analogy with speculation. Is a true speculation, more than any investment or a trade, a true speculation takes advantage of government monopoly. Like, only if you're making or breaking a monopoly will you truly be able to speculate. That's something that would just never happen in the pure free market. But since you have this big player that is slow and encumbers so large a part of the economy and does it in just such a horrible way, that's going to create distortions that are immeasurable. And Bitcoin is one of those distortions, by the way. Bitcoin is one of those distortions. So that's not going to stop. It's not going to stop. It's not going to stop if the U.S. government monopolizes the Gemini dollar and some other Tether or whatever other stable coin. It's going to continue on.
Oh yeah. Buckle up, Piers. It's going to be a fun ride. It really is. Well, Matthew, we covered a lot of ground in these almost 2 hours. So first of all, thank you very much for coming on the show. It was really a pleasure talking to you. And do you have any last words, any things that you want to sum up, or things that we not yet talked about?
No, I enjoyed it, Max. Thanks a lot. So I mean, if you're interested in some of the cut of my jib here regarding monetary economics and Bitcoin, this is mostly what Fernando and I talk about on our show. So that's cryptovoices.com, which you've been graciously showing the screenshots to, and the podcast of the same name, crypto_voices on Twitter. Not really tweeting much more than the shows. Just sort of, I get in a lot of tangents, both with some personal work and with reading and other things. I don't know. Twitter is a great place, but unfortunately, I don't have the intellectual heft, the fortitude to just tweet out amazing quotes every day, like so many people on crypto Twitter. But that's definitely, if you're curious about an episode, just follow us there. We tweet out new episodes, and I think probably regardless of what any of us say, just matters what you do from a node perspective, which is great. It's amazing. It's the best money, probably the most supreme money ever created. There's no doubt in my mind. And even if it's not, as Saifedean said on our show, even if it's not, it's going to usher in a new age of people understanding sound money, even if you have to go back to gold or silver in some respect. Any major bug or failure of this sort of consensus mechanism will take us back to a sounder system, I believe. I think that's a great point that he made, so I would agree with that. And just strap in, like you said. It's gonna be pretty interesting. Even though the all-time high is coming up in 2 days, 1 year ago, $20,089, at least a blended rate that I'm looking at. It's painful. In 2 days, it will be over. We'll pass that peak, and we'll move on to the next. So,
very, very true. But I mean, Peach, again, right? The price goes up, the price goes down, but block production and Bitcoin issuance rate does not change, and that is what is actually important, right? So again, like, see it as a summer sale or winter sale.
100%.
Yeah. Just keep on stacking.
80% sale.
Beautiful.
Amazing.
Beautiful. Yeah. Keep on buying on BISC, right? Decentralized exchanges all the way. That's what I've been doing, like throughout this entire quote unquote bear market. So that's absolutely lovely.
Or those hodl guys, I like them a lot as well. It's not fully decentralized like BISC, but they are peer to peer, and you can do it on hodl.
Absolutely. And big advantage for hodl is that they have more liquidity, right? They have more market providers, and you can buy larger amounts more easier. which is really cool. So and especially for the first month or so, you're limited to 0.0625 Bitcoin on BISC. So liquidity really is the main issue. Like you can buy daily that amount, or like 5 times a day, but every trade is limited to that. So yeah, both. Like HODL is also amazing, and of course we met in Riga thanks to the organization of the Baltic Honey Badger Conference, which was very lovely and a beautiful city that you have there. So yeah. Absolutely.
Yeah, thanks. Well, Roma and Max, those guys are great, and I just sort of strapped my wagon a little bit to them with some help, try to help them out with the conference. But they definitely did the majority of the planning with that. So yeah, they're good guys. Like them a lot.
Oh yeah,
and those guys from BISC. We've had Beams on the show, so he's great.
Oh yeah, both. I think like HODL and BISC go perfectly well together.
Yeah.
And oh yeah, by the way, thank you very much for sponsoring the Baltic Honey Badger Conference upon others. Right, that was some that Crypto Voices did here, and like just to hammer home how amazing this podcast is. Murad must stop. He is.
Hold on, you're breaking out, Max. Where you're complimenting me.
Impossible. So.
That's good. Murad, yeah. Let's get back on track.
Yeah, Murad was like he told me to absolutely I have to go listen to that, and so I did, and I absolutely did not regret it. Not only do you read very, very compelling and interesting articles, you also have fantastic interviews. And like Stefan was interviewing you, Giacomo, Max Kaidem. Who else? Of course, like your episode here on Base Money was phenomenal. You had Ragnar on there, Bob Murphy, Nick Carter, so many different peers, and especially where's the very first one?
That's back to the chapters, so you probably won't see. The chapters are the narrations. The first was I think around episode. So Fernando and I started it like I guess May of 17, something like that, and the April or May, and the first guest we had was Dr. Selgens. It's something like episode 11 or 12.
11. And that was a very, very, very insightful conversation. And then also the one, I think you had Conrad Grother as well, right?
I've narrated some of his things. So obviously we quoted him during the show. I really like him. He, I think he's shown some neutral views towards Bitcoin Cash, maybe more neutral than mine, but I really like his view, and I like the way that he describes things. So when we're talking about that confirmation market, that's full credit to him as well. Although he says a transaction inclusion, but yeah, I think those things are very interesting. And at the end of the day, like the economic stuff is just, it's a great pastime. It's become a hobby of mine, and I think some like you and so many of your listeners. But the cool thing, just the thing that's just fantastic, is no matter how much we would argue, or it'd be academic schisms like there are with the 100% reserve argument. Even though some of us may feel strongly or not so strongly about some views, like it's just amazing with Bitcoin because you can literally, contribute, validate, don't have to trust. It's just incredible. So every day I get this one other thing I would say, like I get courage and confidence from the money that is Bitcoin. Rothbard said money is there in light of uncertainty. It is precisely because of uncertainty in the market that money exists. And flip that on its head and let money give you courage. Not investment advice. Obviously, people might have more courage if they had more fiat a year ago than Bitcoin. But, if you look at it long term and you look at all the things we've been talking about and more, and so many other people, like let Bitcoin give you courage. Like I have courage for every little bit of Bitcoin that I buy, and the way that the system develops, validate on your own, run a node, experiment with Lightning. It's really an incredible system. And I break with Fernando a little bit too. I'm happy to say, I don't run other nodes of other altcoins, but they don't bother me. I like to see what happens, with those systems, for better or for worse. We'll see with some of those, but I think Bitcoin has so many firsts and so many onlys. It's really hard to not think that that's the one that if there is only going to be one global money, it's going to be Bitcoin, and it's certainly possible. There's only one global money. So, I'm probably rambling again, Max. I don't know.
No, but very good and very true. And free market, as long as it's peaceful, build, create your own shitcoin. I mean, I'm going to stick with
shot. Exactly. Exactly.
Piers, yeah, thank you so much for joining me, or us here, and in this conversation. It was really cool also having you here in the chat and asking the questions and answering them. That was fantastic.
Thank you, guys. I didn't look at the chat the whole time, and I'm looking at it from your screen share, Max. But anything else, feel free to ping me. DM should be open on Twitter, and happy to keep the conversation going.
Awesome. Oh. And Piers, also thank you very much for your support here of the World Crypto Network. And by the way, I just briefly show what Tallycoin is working on. So this is a monthly gold fundraiser, which you can support. Not much, just 0.01 Bitcoin, right? But then this is really cool. There you have different perks. So you can get early access to Bitcoin to the Max, the show, or the reading of the Bitcoin Optech newsletter, which is absolutely fantastic. Or a step-by-step tutorial on Wasabi or Bisq. So all that is possible with a humble donation. Oh yeah, but you must be logged into Twitter. And then also what is really cool, which I haven't used yet, is the Tally chat. So you can ask your question, throw a couple Satoshis on that there as well. And oh yeah, right, we already have here the new show with Matthew here in the thing. So that's awesome. And Lightning Network coming is also to Tallycoin. So that's fantastic. Piers, thank you for your support, man. That's really... Oh, cut out again. Just a joy is always to talk to these amazing Bitcoiners who truly care and who truly want to manifest sound money in our lifetime. And we will make it happen. So yeah, it was a fantastic show. It was long. Thanks for you sticking in there. I definitely learned a lot and was of immense value. So again, thank you very much, Matthew, for joining me. It was fantastic. And
thank you, Max. I hope to see you soon, sometime around Europe. We'll have to meet up.
Absolutely. Yes. Perfect. Okay. Piers, see you on the next show.
Alrighty. Take care.
Bye-bye.
Thanks a lot. Bye-bye.